Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
With the Canadian dollar and the euro, and pretty much that's it for the day. So nothing too much exciting for the U.S. markets. Be careful with the euro. Be careful with the Canadian. We'll look at our heat map and see where our strong currencies are. Right now, the New Zealand dollar is strong on all 4 time frames. The euro is weak on all 4. The dollar is also weak for the most part. The Swiss franc is also weak. So the Swiss, the euro, and the US from the bottom 3, the Aussie, US, and Canadian in the top 3. So try and trade those to the strength of the New Zealand dollar, the Aussie dollar, and the Canadian dollar. And we'll trade to the weakness of the US, Swiss, and euro. And so now let's go to the charts. And we had an alert, 15-minute alert on the New Zealand US. Remember we just said that we're going to trade to the strength of New Zealand, the weakness of the dollar. The dollar is the second currency of the pair, so we're going to be trading this to the upside. We have an up arrow, we have a bounce, an arrow, 2 arrows to the bounce to the upside. And right now, this is where we are right now. Now, one thing we're looking at is you're trying to figure out what time frame, what area are we looking at to find out where our upward, if we trade this to the upside, where are our targets? The good news is all of our moving averages are in the right order. We have the green, which is the 5, the yellow, which is the 13, the arrow moving average, and then we have the orange one, which is the exponential 62. They're all moving in the right direction. Again, we want to trade to the strength of the New Zealand dollar. Here is a strong move up, not much of a pullback. Strong move up, not much of a pullback. This one had a little bit more of a pullback. But we're going to check and see from this down move to the left-hand side, since this is Friday, this whole area is Thursday, Wednesday. From Wednesday, it had a strong move down. Now it's coming back to retest some of these levels in here. So we're going to draw the Fibonacci's. I'm going to take it from this zone. It's nice having, one thing about the arrow, it's nice having these little zones to be able to look and see where it's going sideways in between the zones, but you can see where it's trending inside that sideways zone. We have a nice big range here from up here to from the red to the green. We have 67 pips. That's a nice range to go. We're already coming up onto the upper 25% of this range. So this thing, the up move of this is pretty much working its way through. Again, I'm going to mark the upper and 25% zones. So here is the upper 25. I'm just going to mark it right up here from where these 100. This is the upper 25 right here. This is what we're looking at for today. And today, if you're profitable for the week, don't be in a hurry to take trades and give your money back that you made for the week. Oftentimes, I just, if I had a good week, which right now I think I have, I'm not going to be in any big hurry to take any trades on Friday. Fridays tends to be my least performing day as far as the trades that I take. So again, I'm not going to be in a big hurry to give it all back at the end of just because I wanted to try to make a point or to show. A lot of people don't even trade on Fridays, especially if they're profitable. They just take Friday off and just say, don't need to do that. And you shouldn't either. But it's always good to come in the room and watch the magic happen here. So we're going to mark these 3 zones. You can see right here is we had the strong move came right up to this blue line, which is at our 50% retracement of the bigger move. Came up, based a little bit, and then it shot up again, taking out the 61, took out the 50. And you see right here, it came out of the 23%, came right up to the 38. Now, whether these these levels are, whether I say it's 38 or 6, these numbers could be reversed. It doesn't really matter. The distance and the price points are still the same. If I reverse my Fibonacci, depending on the direction I go with. So these are the points. This is coming right on up to the upper 23%. Now that doesn't mean it couldn't go deeper into here, but that's what we're looking at right now for the zone. And so right now, this is kind of, we already had the second arrow, and there's not much room to where that zone is before it's going. I would be looking at possibly a strong retracement coming back. In this case, the fact is already coming up to the 23. It's already broken the 61. It's coming up. We got a nice little wick right here at the 23. I'd be looking at from this move on up, a pullback, and have a retest where we're looking at possibly we're possibly looking at a turnaround area, but I'm going to be looking at this as being the high. It's already hit the 76. I'm looking for a nut to build a little wedge up here. So I expect it to pull back, come back, maybe tag this, maybe even break through up a little bit higher with maybe a divergent. Maybe we'll just keep on going. We don't know. But we're kind of at the end of this nice big move here. So what I'm going to do is I'm going to remove this Fibonacci. I'm going to keep the zones that I marked. I'm just going to delete that. And now I'm going to take from this move. Here's the end of the main move. It was all the way down here, and you can see it came up out of the 23% range. Let me mark this a little bit here. I'll take this over here so you can see this a little better.
Morning, partner. What do you got cooking up in the lab?
Good morning. Good morning there, Matt.
Go on.
I'm going to take it right over to this area right here. Here's where the low of this is where the strong move came back down. It came out of the 23% area, came right back in, formed a here's the anchor. First came out, got to the 23%, returned back. This was the strong move out. This is the one we're looking at where we're going to start taking to find the trend. So here's the anchor, here's the hit, here's the third hit. So we're going to take it from here, and you can see what it did overnight. Here's the first hit. Now I said we had there's the third hit. Now I said we're also I allow one breach, no candle close, not closing through the body. So I allow one wick to come down through the trend line when this forms. This is a valid trend line. If you extend this thing all the way out here, you'll see that this trend got broken as it came back and retested into the 23%, and then it shot up again. So right now, this is the move we're at, looking for a pullback. And so we're going to take it from here, put it on up to the top. That's the highest it is right now. I'm going to extend this trend line all the way out, which was once support, is now resistance. So here's the trend line. And if you look and see where this trend line extends out, and you see where you have a couple of points of energy right here. Here's an energy point. It's right here at this was the 61% extension off of this down moves. So there's an energy point right here. It came back down, retested this point. This little spot right here was an energy point. That's where price was happy. It followed the trend line. It followed the Fibonacci. And right now I'm looking for it to retrace back into this 23 to 50 area. I'll probably be looking at it to maybe the 38, just because it still has some upward strength with the New Zealand. So I'm going to put the shape in my rectangle right in here at the 23 area. And I'm going to wait and see for the price to come back to it. If the price comes back on a lower time frame, let's go all the way to let's check out with the 5-minute. If the price comes back to that level, and the moving averages, the 5 and 13 period moving averages are still respecting each other. In other words, if the 5 does not cross the yellow, if it can all the way back to this zone and the 5 is still on top of the yellow, then I'd be willing to take the trade. If it crosses, then I have to wait for it to cross back again on a lower time frame. I go on a 1-minute chart. I want to see, because I want to see that 5 leading the. I want to see the 5 leading the 13 moving average. Here's a little pullback, came back down. Now we have a little down arrow on the 1 minute chart. So this, and so right now I'm still looking for it to come and retest this level right in here. I'm trying to make it as tight as I can. I'm looking for it to come down. If it can get into the 23, not close and close above, the moving averages are in line, then I can maybe take a shot at this little line up here. This is just a projection that it's not going to break through the top, but there's a good chance if it has enough strength, it's going to break into this blue zone. So you could have a little bit of a target with that. It did not pull back to the 23% yet. So I can't take the trade. But it looks like it's, and even so, because I also look at this is going to be my target. If that's my target, I want to be able to, I want to see a pullback. Well, I was going to see it pull back 15 pips. If it could pull back to like where this blue zone is, this is the, these are some red zones or green zones that were formed with the 1 minute error report indicator. So I'd like to see it pull back a little bit deeper. You can also see like right now, here's a high, pulled back, touched the moving average, came back, made a lower high, and now it's making a lower low from here. So it is starting to give back some of the, it's starting to respect this area. I want to see a little bit of a pullback, maybe a strong move down, and then come a retest to give me my 5 to 7 pips to that area. So right now we just have to wait and see what goes on, what's happening. Any questions so far?
Nothing in the Q&A right now. Looks like a pretty good setup. I do like the what we call that at the top there, that formation, probably like a little double top where you have one high and then you have a lower high and then it breaks to the bottom a little bit.
Yeah, so. Oftentimes what you'll see is this is kind of where we talk about the M formation at the top of a move. We talk about the W formation at the bottom of the move. And once the M is formed, you'll see a strong move down. Then you get the A's. You have a little A here. And usually you'll get maybe 2 of those before it looks down and starts forming another W. So right now I'm kind of looking at this thing pulling back a little bit further.
Yeah, because what you're looking for is you're looking for a bounce off a zone. We're not going to go take the trade in the middle of nowhere. Right. And that's why we're using arrow to add that extra confirmation.
Exactly. So like I say, here's the first pull down. Here's a strong move up, retracement. Strong move up, it's retracing. And now actually what I could do, a couple different things we could do. We could take it all the way down from the bottom, or I can take it from this last pullback, the next extension, and see where the retracement is off of this move. And right now we're probably right at the 50%. And so that would be another possibility to maybe take this trade. If you don't want to go all the way from the down here, a lot of times I'll move these moving averages out. The only thing with that is your zones are going to be a lot tighter, and you're going to have a little bit less chance of your profit margins are going to be a lot lower. Remember, I like to see at least 15 pips to my target. So I want to see a pullback enough to maybe at least get me into that. So I still want to see a pullback pretty much down to this area. I'm okay with anywhere between 13, 14 pips, 12 pips. If the less the closer it gets, or the less it respects the 15 mark, the less profit I'm going to be looking for. Factor all the way up here, I want to see at least a little zone of, I'd like to see about a 7 pip zone. And so right there's a 38. From the 38 to the 50, that gives us 3 pips. That's 5. I'd be more apt to draw this zone. I want to see it pull back to where I at least have about enough. I want to see it get into this zone so that this it gives me a potential target. I like to see the fact I'm not expecting this to break here. If I do the pullback on this, then I'm going to be looking at pulling back to probably this trend line. There's my 7 pips right to the trend line. And you're just sort of marking out how deep does it have to go to be able to get my target out of here. So right now I'm looking at a pullback. This isn't a real big move right here. From here to here, there's our 15 pips. So to try and get another 5 or 7 pips out of that move on the pullback, it's going to have to break through and get up into this upper zone. That's tight. It's really tight. We're trying to pick a top, and I don't really believe in trying to pick a top, but right now it does still have the strength. The New Zealand it was stronger, so I'm still not ready to take it short. Remember, the New Zealand's still strong on all 4 time frames.
Yeah.
And the dollar is picking up strength here. You can see where it's picking up strength here. Now it's in the top 3. Here it's in the middle 3. Here it's in the middle 3. So this thing's starting to lose strength to the upside. So now we may start looking at this thing to actually start reversing and trending the other direction.
Hey, so wow, Pia's got a great question in the chat here. She says in the Q&A, she says, can you actually use the fib lines as zones like arrow for bag entries, kind of like bounces? And if I can preface it, I would say that I'm only taking bounces off of the zones. I'm not going to be using Fibo to specifically tell me that there's a zone there. I'm going to use it as an additional confirmation to a zone.
Yeah, for myself, I will use the zones that I draw with the Fibonacci's. I'll use them. I like it when I get an arrow alert along with that. That just gives me an extra level of confirmation that I'm in the right direction. Now keep in mind, if you get a 1 minute alert, if you're looking at an uptrend, you get a 1 minute alert, that's telling you that you're probably in a good little pullback, but you can almost expect another reversal arrow not too far after the pullback. The only problem with that is by the time you get the reversal arrow, in other words, like if you got a down arrow here, which I think we did, on a 1 minute chart, we have the down arrow. By the time you get the up arrow reversal off the arrow alert, you're already giving up a lot of your pips, especially when you're up here at the top at your target area. So I think to answer your question is, I use them both. I like having the arrow. I don't use it exclusively when once the arrow leaves the main zone, once it leaves the 23% zone, then I'm pretty much looking at the Fibonacci pullbacks, waiting for it to pull back to my levels and to try and grab my pips in between. And I'll try and I may do that 3 times on the way up. From once it left the 23% zone here, I may do it 3 times. So here's like 1 move, pull back, 2 move, second move, pull back, third move, pull back. This is sort of like an Elliott wave. Here's the wave 1, wave 2, wave 3 is a big move, wave 4, wave 5. This one's already coming up to like a wave 6. So this is already extended, but here was the zone. Here was our 23% zone, which it respected. Now it's coming back, and I expect a pullback pretty much maybe out of the 23%, come back up, retest this area, and then once it leaves it the second time, then I'd be looking at trying to find it on the way down.
So right here, what you're doing is you're just looking for a better entry for a long trade, correct?
Correct. I'm looking for a long trade. I'm looking for a pullback. I'm looking at this little move right here. I want to see that when you see these pullbacks, if you look at this one, let's say take this one for example. Here's the first one. Here's the base retest. You can do one of 2 things. You can look, if you want to extend your range a little bit to get a little bit more room in between the zones, you may take it from this one, maybe take the last 2, but this is a strong move up. If you look at this move right here, move this out of the way. If you look at this move right, if I get this Fibonacci to light up here, objects, where's my Fibonacci? There we go. If we can get this, take this strike to this area here, you can see it pulled back to the 38. Here's my 23. Let's see, where's my 23? It's right there. Here's my 23% right there. Here's my 50. It pulled back right to it pulled back 23 to 50% off that move, and it took off again. And if you look at the extensions off of this, which I'm going to have, you can see that it came up off of this extension, pulled back to the 38. It should want to be hitting the 38, which is exactly where it hit the 38. And it's also right here in the zone. So this move is probably getting pretty close to being done. We're already in our 5th and 6th wave. You can take it from here, look for a 23% pullback. You can maybe take it between here and here. because one thing by keeping this thing down a little bit lower, it gives you a little bit wider range in between your zones, which gives you a little bit more wiggle room. It'll get you a little bit earlier entry, but it's also going to give you a little bit better. The jury's still out whether or not to move these each time or to just let it go. If they're too tight, I'll pull it back to the previous one and then use that zone. Because you can actually just look at it with a lower time frame. Kind of like it right down to here. So right here's my 23. Continue right over to this one. There's the 23. I like 23 to 50. That way I have my 38 in the middle. If the zone's big enough, you can just use this. You can see right here, it pulled back into this zone, and then you can use this for your target. The problem is with this right now, I don't know that you're going to be able to, the fact it's already had 3 waves up, I don't know that you're going to be able to get your target price out of this. Even if you did get in here till you get your spread, that's only 4 pip spread to the target. I think it's getting pretty much, I think you're trying to take a trade near the top of the move as this thing's starting to retrace and turn around and come back down. But it's got a little ways to go because these moving averages are going to have to be respected of it. Now you do see that the 5 is still above the green, came in, got some green arrows. We're on a 1-minute chart. So to take this would be, you could probably take it off of this, but I would probably use a buy stop, maybe right at the 23. Once it came down, you'd be in it already. But I would use a 23 as it pulled into the 38. I'd use a buy stop, a close above the 23, and then go for just whatever you can get out of it. You may be able to get 5 pips. You may come up here and stall. I would not be surprised to see this thing stall right at this area and give us a little bit of there's a high, give us a little bit of a lower high as it works its way up and rejects, and then come here, and then we have a lower trend line from this point to this point, and then really pretty much wait for the break of this level.
But it could, in fact, just go straight through there, couldn't it?
Oh, it could. Yeah. I mean, you don't know what it's going to do. Being it's near the end of the week. There's probably some profit taking last night. In New Zealand, they're about ready to go to bed. We just got up. They're about ready to go to bed. So their day is almost done in New Zealand. So, and it's been a Friday, so they're already into their weekend. So this thing may not, I would not consider this to be tradable right now, especially being the fact it's a Friday. And if it's a Monday or if it's a Tuesday or Wednesday, yeah, I think it may be, I'd be more apt to maybe take that. But you have this little wedge here. We've had 4 waves coming back. I'll be waiting to see it, more apt to see it break this trend line, go down, have all the moving averages flip in the other direction, and then start working our way back down to these zones on the way back down for another, because it's still going sideways. And that's my analysis on this one. Any other questions? Any reason why you don't take back entries that when going opposite way and ends up the same back entry point? Mainly with the back entries, in order to be a back entry, it has to be with the trend. Right now, if you're looking at it on, and I would not look at anything with a trend on a 1 minute. I would be looking strictly for entries. The 5 or 15 would be about as low as I want to go to be determining what the trend is. And if you look and see where the bag entry, like this was a bag entry. Now this is probably in an uptrend. If you go and see how many green zones we have, let me just.
At that time, though, Al, there would have been some red zones there.
Well, and there still are. There still are some red zones here. So
you see where that drop.
We have 1, 2, 3, 4, 5, 6 red zones. So it does actually have a lot of. This would be, but it's not a bag entry yet. It's not. There's no zone right here. So it would have to come all the way up to this point and reverse before it could be a bag entry.
Al, did you throw a Fibonacci on there from the top of that original run into the red zones all the way down to the green zone?
The Fibonacci that I drew was from this point down to this one. That's where this 25%.
Oh, okay.
These are the 25% zones.
Okay.
So pretty much right here at the, and you see that this red zone is right at the 76%. Again, you can't make this stuff up. It just,
No.
this is where the red zone was at the 76% retracement. So that's almost like another energy point right here. This is the zone. That's the top of that 25% zone. And so, again, I don't consider this to be a good trade. It's too far into the, it's made too much of a move over the night, and we're too close to the end of the day to play with that one. Like I said, New Zealand, their markets are closed. Let's take a look at another one here. Here's a British CAD. Again, we'll look at this was a
Look at that.
bounce, arrow, go. But see, by the time you got the arrow, look where it was all the way down here. That was a huge move. I'll be looking at the move from the upside to where it's retracing. And let me look at where my moving averages are. The moving averages should be pointing down in good order, I would think. Let's see where we're at.
Hey, on this markup that you're doing or this evaluation, Al, can you re-explain your 25% zones just for PIA?
Sure. Yeah. First, I'm looking to see where the last significant high, the last significant low is, and see if price is in between. You can see that this low is pretty much right in line. That was like a double bottom. We had this high. Well, this high was taken out off of this move. You can see where I have the high here. That was taken out, but still kind of respecting it. So this is the move up. And so right now, all of our moving averages are pointing down. So this is the move that's going to generate our zones for the down move. So I'm going to draw the Fibonacci from the pivot low to the pivot high. And I'm looking for the upper 25% of this, which is right here. It's actually is 23.6. That's the upper 25%. And the lower 25% is from the 100 to the 76.4. That's what I call it. I mean, I'm just rounding it off to 25%, but 76.4 and it's 23.6. So I'm going to draw the zones. Those are the zones where I expect it to be turning around. So if I get my shapes in here, there's my rectangle. So I'm going to draw my rectangle from here, the high, to my 25% and just move it over. That's the end of the day today. I do the same thing over here, insert the shapes, rectangle, find my lower 25%. This is where the origin of it was. So I'll start from the origin, which is right here. Include that little point. And so this is the playground. This is the area where the price has been going sideways in between these two blue zones I just drew. Like I said, for the most part, here's a red zone, here's a green zone. Price has been going sideways inside these zones for the last couple of days. These are the day breaks. This is Friday. This area between here is Thursday. The area between here is Wednesday. So I know from Wednesday till now, it's been going sideways. But in that sideways motion, if you look at a lower time frame, you'll see it's trending. Strong move up, a pullback, move up, pullback, move up, pullback, higher high, higher low, higher high, higher low. So it's trending inside a sideways range. So what we find to be is significant is these, from the range from the high to the low of the up move, price tends to find its way into this zone right here, the 38 to 61. This is like what I call, it's almost like a magnet zone. The price will come back into this zone. From the high, it comes into the zone. From the low, it comes back into the zone. So right now, these 3 points are significant. Whether it's going up or whether it's going down, there's significant points. And until it breaks out of this range from this high and this low, until it changes that, these are going to be the same. They're not going to be moving. So I'm just going to mark these points, because what we were trying to do, no, we didn't catch it because we weren't here at the time. But once it reached the top, it came back down, came out of the 25%, went back in, made a lower high, and now it's starting to trend. Once it broke the 23 for the second time, I'm looking for a trend pullback. I'm looking for a strong move down, a pullback, a strong move down, a pullback, strong move down till it gets down to this zone, and now looking to reverse the process. But this point, and this point are still significant, whether it's going up or whether it's down. These are this is I call it, this is kind of like my money zone. This is the zone where I'm expecting it to gravitate to on its way. As it's going sideways, it hits this point, rejects. Now, if I go to a lower time frame, I'm on a 15-minute, let's go to a 5-minute on this. You can see it came up, created the zone, and once it made a high, I can tweak this up a little bit here. Right here, here's the high. I'll move this up just a little bit. Try to make it as tight as I usually try to make it as tight as I can. So right there. So once it made the high, and once it retraced 25% came out of the blue zone, you can see it tagged this moving average. That's significant. That would have been a target. Now it came back up and retested the blue zone, and now it came back. So here's where we're starting to look at it. It came back down. It closed below the 38. First off, it came second time. It came back down, closed below the 23, made a lower high. Now we have an upper trend line. So from here to here, here's the upper trend line. See if I can I may have to make this a little darker so you can see it a little bit better. I'll make this one a little bit darker just so you can see it shows up in that blue zone there. There you go. You can just see it there. So here's the anchor. Here's the hit. Now this right now, strong move down, pull back. You see how it broke all the way through, came back down, came up to 61. Now it's really actually starting to. Now this one, you weren't going to be able to get into this one very easily, but let's see if I can find it on a 1 minute. See if we can find a retracement. From this move up, here's a strong move down. This is almost like one clean swoop, but here was a little basing right here. Came in, closed below the 38, came back up, retested it. If you look and see, if I take it from where it started, where it came out of the zone, say about where this down arrow is, and I draw another fib line. Maybe I'll redraw my fib lines. I'm going to take this. These are now set. I'm going to redraw it to the other direction. Get rid of that one. So now here's my down move. Here's where it came out. So from here to pull back. And you'll probably see that it pulled back somewhere between 38 and 51% retracement. So here's the move down. Again, I'm looking for it once it retraced back into the 23 to 50. And this one came up really pretty deep. This was a strong move down. But actually, here's the first one right here. Looking at it from a 1 minute chart. There's the first pullback right there. This, where's my fib line here? This was the first point where it retraced. First move down, pulled back, and you see right here, it retraced back. Here's my 23%. Let me draw the zone on this. This is one reason why a lot of times I'll go down to a 1 minute chart to be able to catch these little moves here. But here's the low. Here's my 23% line right here. And my 23 to 50 is usually what I do. I'll take it. Once it pulls back, and you can see it pulled back from here. It pulled back. Here's my 23%. It went right into the 23% and came back down again. So if you get this little pullback, comes into the zone, you take the next run down till it gets to this level. And see if you've been able to get your 7 pips. That's 9, 10, 11 pips. And you can see where on this pullback, if I pull this up a little bit, you'll see on this pullback, you see the green never crossed the yellow. On the pullback, the green came up towards the yellow, never crossed over. And once the price came up, couldn't cross it, came back down, crossed through the 23 line again. I was able, you could take the trade and then go for the next zone down here. Came down here, broke through it, pulled back, retraced. Here's your move to the downside on this one. If I can grab this. So here's the down move right there. let's see, where's my Fibonacci is. Here is the origin. This is where, this is the strong move down, pulled back to this line, came back down, and then there's another. So you would have had a chance to get 7 pips here, pulled back, another 7 pips. Now it's down to the 25% zone. This is our main bounce point. And right, it bounced, strong bounce, came back, retested, made a new low. But right now it's still waiting for this thing to come back out of the zone, retrace, still using these heavy blue lines, solid blue lines as targets. Comes out, pulls back. Here's another little wedge right down here at the bottom. And the whole process repeats itself.
So, so Al, did you, sorry, I missed the part, but Pete is asking about the Fibo expansion tool. Did you just go over that, or?
Yeah, well, I just went over the Fibonacci tool here. I didn't
Okay.
do the, this is a Fibonacci, yeah, this is just the expansion. They do have a Fibonacci extent. Actually, I don't think TradingView has the extension one, which I use
I
off
don't,
of TradingView.
yeah, I don't think MT4 has it.
Yeah, so basically just use the basic Fibonacci lines. Wait till it pulls back. I'm looking at the 23 to the 50 for the pullbacks. Sometimes, if it pulls back to the 50, I'll use the middle of the 61 for a stop. And then once it pulls back into the 50, when it comes back down through if it closes, wicks up to the 50, closes, can't hold the 50, and I'll wait. I'll try and do maybe like a buy stop here at the 38 or the 23 to try and catch it on the way down. That way, if it goes up, still keeps going up, it saves you from getting into the trade, but also gives you a little bit better point to get into it if it's still looking for the next target.
Now, could you also show how you set up your Fibonacci, the levels that you are using?
I can do that. This is a good. Yeah, these are good exercises. Yeah, these are good exercises to do on a Friday. So what I'm going to do is I'll take the Fibonacci's off. I'll just come over to the objects list, find out where the Fibonacci. I'll just click on that and delete it. So, in fact, I'll start with a whole new chart, whole clean chart here. So, template, my template. This pretty much cleans everything up and gets rid of all those zones. So now I go to my Fibonacci tool, which is this one right here. I click on that, and you draw your lines. And so you right click on you have to highlight these little dots there. Make sure those little dots show up, right click, and then right click Fibonacci properties. And here's your level. These levels are already preset pretty much. You have the 0, the 23, the 38.2, the 50, the 61.8, and then the 0. So those are the main lines that I use. Once you get to the 0, then I go to the extension. So basically what I want to do is I want to load these extensions. And so you can see these are negative numbers. So I just continue with the tool, right click, get the tool back up again, the properties. And then what I do, these are all my positive numbers. So once it gets down below the 100, I go with a negative 0.382, a negative 0.5. And then I just type it, and then put the description in. So you type this one, negative 0.382. Come over here, give it the description, and that gives it these little labels right here. Go down to the next one, you just add it. If you just go add one, then you would add it to, say I'll put a minus. We'll just go minus 0.764. Call it. Put minus, and then come over here to then just type in minus 76.4, and then that's how you add it. I already have it in there, so I'm just going to take this one off because I don't really need this. Delete that one, and then just keep adding them in there. So I've got as you add them, just go a minus 38.2, minus 0.5, minus 0.618, minus 76.4. And then a minus 100. that gives you those extensions so that as your price comes up, let's say your price is moving up, or actually say it's moving down because you're looking for the extensions for targets. So say the price comes down to, let's say it comes down to the 38 and closes, and it pulls back, and it pulls back to say the 61. I would try and maybe get in as it starts coming. Now you don't always know how far it's going to go up. So as I get a close where it wicks up to say I'll just say this point. Let's say it just wicks right up to in here. It wicks up but doesn't close, and it closes down here. I would probably try to enter probably at the 38 if I'm really aggressive, or I might wait and have a sell stop here at the 23. The fact that the price came all the way up to between the 50 and 60, your first target is going to be the 0 line right here. This will be your first target from here down to here. That's your target 1. It may come down there, and now you're into the bottom 25%. If it can break through that, pulls back up. If it can break through this on the way down, comes back up, retests. If you don't change these, if you don't move the Fibonacci, this pullback here, if it can break this, this is your target 1. It came up to the 50% line. Your 50% target is down here. Then I would have my target zone being down to this area. And what I usually do is I say if my target is 50%, if it comes up into this zone, I'll take the one up above it and that zone. If it comes anywhere down into here, I'm out of the trade. And oftentimes what will happen is I can look and see, okay, from this move, I'm looking for my 7 pips. So if I can move here 7 pips, I could be, if I get in here, if I get in off the 38, my 7 pips is right down, pretty much right down there, the 7. By the time it comes into that zone, I'm out of the trade. If it breaks through, pulls back again. If it breaks, pulls back again, I'm looking for another zone. Here's move this thing down to here. Pulls back. I'm looking for my 23 to 50 retracement, which is going to be, now what I'll do is I'll move this one down to here. Now I have the strong move down. I'm looking for the retracement. We don't know where this is going to be, but let's just say it stops there. I'm looking for the retracement from here, waiting for it to come by 23 to 50% zone. Let me just draw another one here. Shapes, rectangle. So I'm looking, here's my 23. Here's my 50. Price comes up, wicks up in here, comes up to the 50, say it wicks on up, wicks, but doesn't close above that. I'll enter the trade here, go for my 7 pips, knowing that my target was still down here. There's my 9 pips, comes back down, hits that target, and I'm out for the second time. And I just work it down all the way down until it gets to that major zone that you drew from the up move, where you're in the upper 25%. So say your bigger move is like this. Here's your bigger move. Here's your lower 25%. Here's your upper 25% up here. Forget about these candles up here. We're just looking like we're losing a clean chart here. Here's my upper 25%. Here's my playground. Here's my three markers. Mark it here. Mark it here. market here. So price comes up. So right now, price is, we'll start this one all over again. So we had the price that came all the way up, came from here, went all the way up to the, came from the lower 25, came on up, came up into there. Now I'm looking for this move coming down. So take the move coming down. So from here, breaks through the 25. These, let me get these lines out of here.
You might get an arrow. You might get an arrow for a buy that would be counter trend. So that would potentially set you up for maybe a sell bag entry, right?
On this, what you're talking about, hypothetically, or
No, really.
on which, on this one here, on this price? Which
Yeah,
chart are you
but
talking about? Which chart are you talking about?
GCAD, yeah.
So, all right, well, tell you what, let's just redo this whole thing on what we have here now. After that explanation, let me see if I can duplicate the explanation that I was showing about. Basically, just trying to show how to work the Fibonacci lines with the movement, potential movement of the prices.
Yeah, Fibonacci is a real key thing. Really powerful levels that can really help. I'm not sure, Stephanie, how you associate RSI and Fib together. Like, I'm not sure around that question.
So let me redraw this again, just go through this exercise. Basically what I'm doing right now is just going through the exercise of how to draw the fib lines and how to use those fib lines. Arrows aside. So let me just redraw this to make sure my moving averages. Again, I want to make sure all my moving average, I'm trading with the moving averages all going with in my favor. You see, like right now it's starting to change over. Let's just take this little move here, from this move to down to here. Now we're on, I like starting with a 30-minute or 1 hour chart. You can see that it's all, on a 1 hour chart, it's all pretty much jumbled up here. Let's go to a 15-minute chart and see. There's a little bit better room. So here's the low, here's the high. Here's where I'm going to draw my Fibonacci from here to here to get those, to get my target lines in. So I'm going to go from this point to this point. I'm going to mark my middle zones, which is here's my 38. Here's my 50. Here's my 61. Here's my lower 25. Here's the 76. Here's my 23. Those are my top 25% and lower 25%. I'm going to put a shaded area into that. So from here to here is my zone, my upper zone. That's where it reversed. Here's where it left to go up high. Here's where it's coming back to retest the zone. So right now it's trending inside the sideways motion. This may not be the best one because this was such a strong move down. You couldn't, I don't know where you even get into it. But right here is your lower 25%. And you see it came in, and now I'm on a 15-minute chart. I'm going to go to a 5-minute and see if I can see where this thing may have bounced a little bit. Strong move down. Now this one just went and cleaned right through all these, all in one 15. Well, from these are all 15-minute candles. So from here to here in 9 15-minute candles. So basically in about 2 hours and 15 minutes time, it spanned this whole zone, never looked back. And it hit back here. The buyers came in here, pushed it back up. The sellers came back, pushed it back down. So right now the buyers it made a little lower low. It's went deeper into this 25%. This is our green zone that the arrow indicator drew, right where this heavy blue is. That's basically the green zone. The reason why this is blue because I overlaid it with the other lighter blue. So right now it's coming, it pulled in, it's coming back out of the 25. Now, once it pulls back, I want to see it come back down again and form a wedge. Something like this. I want to see it form something like that. Once it comes in, then once it hits this, gives me my anchor, my first hit, and then it comes up, and once it can come up to here and close above the 60, this blue line right here. So if the price can come up and close above that, I'm going to be looking for a pullback. And then I'm going to redraw the Fibonacci from this strong move up to a pullback. So let me change the Fibonacci's on this. Let me get rid of this. I'm going to keep these lines, keep my zones that I drew, and I'm going to redraw the potential. I'm just showing you, this is a hypothetical now. We don't know what it's going to do. This is hypothetical. This is what I'm looking for. I'll go to 1 minute chart here. I'll expand this thing out. It came out of the zone and pulled back. So I'm going to draw a Fibonacci. Now here's the trend. As you can see where this was the move that came out of. So I'm going to take this point, move it over here, and see where it pulls back. Looks like it's going to come back into the zone. It should make a higher, in fact, this little blue area here, this was a arrow zone that developed once this thing pulled out. This is significant. This is one reason why these arrow zones are so helpful. So I'm looking at right now, I'm looking at this thing to come back down and retest this area. And then when it pulls back out again, we can be looking to start drawing some fibs. We can actually probably start drawing them now. I'm looking for a little bit of a pullback. Maybe the fact this zone is developed, I can take it from the bottom here. And I'm going to move this thing over. I'm going to just hypothetically use the corner of this zone here. If it comes back down, it should not make a lower low here. Take my Fibonacci. Here's the low. Came back out. Closed above. Now I'm looking for the pullback. And the pullback, I'm looking for the 23 to 50%. Insert shape, rectangle. Here's my 23% of the pullback would be, actually it's going deeper than 23. And the first one oftentimes will. And here's my 50% line. I'll put it down just a little. You can see where it just sort of wicked right down below. And then you could, now at this point, I'm looking to see how strong is the British in the CAD. I'll come over here, look and see the CAD is strong. CAD is strong, CAD is strong, CAD is strong. So I'd be trading to the strength of the Canadian dollar. The British is a little bit weaker. It's in the bottom three. The Canadian dollar is in the top three. I'm be trading to the strength of the Canadian dollar. Come back over here. And the Canadian dollar is the second currency of the pair, which means that it's going to be stronger to the downside. So I don't want to be taking it yet, because right now the Canadian dollar is still stronger, so it's more likely to go down. But once it comes back down, and once it can make this little transition, and once the moving averages cross, once I get this green to cross the yellow, which it did right here, pull back now. Now I need to get to cross once again. You can see where the green, I don't know if you can see it very well. Here's my green Fibonacci line. I want to see it cross and close above. So I don't want to be taking this thing at this point, because I want to see this one cross and start giving me some, now right now the first target is going to be right here. This Fibonacci is holding, is still holding. I'd like to see a little bit stronger pullback. Preferably at this point, I would like to see it pull back up into this zone and then try and catch the next pullback. So right now, there's a low. Let's make a new low. We don't know if this is going to hold or not, but right now it is. But I like to see a little bit strong. The fact this is so tight right now, I like to see it pull back a little bit, get a close above this line. If it closes above, look for the pullback then, and then this would be my target. If it pulls back, if it closes above that, look for the pullback, and then the next one will be my target. So right now I'm looking projectedly wise, I'm looking for it to come on up, get a close above this line, pull back to the 23 at least. Preferably then I'll be having, then this would be the zone that I'd be looking at. There's a 23.
Yeah, so on just a quick thing. Some people are asking why we're focusing so much on more of the teaching aspect today. Right now, we're at the end of the trading week, so it's Friday. Sometimes there's a nice setup. If there is, great. We'll go take a look and see. Reality is we're just about to a lot of forex traders don't actually take any trades on Fridays. They'll actually trade during the week, and then they'll stop entering positions on the Friday. And one of the reasons is everyone's trying to get out of the market. So if you look at the chart, you'll notice that about 11 o'clock or 10 o'clock on a Friday, you're going to have one move, and then it's done. It's going to consolidate for the rest of the market open until like 5:30 or whenever the market closes. So there's not a lot of great setups generally on Friday. Do you take a lot of trades on Friday, Al?
No, I take very few on Friday because it just doesn't, usually by Friday, like I said, if I fit my weekly target goals by Friday, which is usually anything above 3 or 5% for the week, I don't want to be giving it back. And more often than not, if I trade on Friday, the markets aren't, they don't always react quite the same as they do during the week. And I end up finding myself giving it all back. And then I get really upset with myself because I was profitable. And then I tried taking a few more trades. So Matt's absolutely right. That's one reason why I kind of focus a little bit more on Fridays. I focus a little bit more on the technical theory, the technical strategy that we're doing to help maybe lock in everybody's minds about what we're actually trying to do and what we're trying to demonstrate here as we take trades during the week. So right now, this is the projection. Here's a pullback into the zone, and then this will be the next target. So this is what I'd like to see. I see it come on up, close above, pull back into the blue zone, wherever that happens to be. And then this will be the target. And then from this point to here, I got my 7 pips. There's almost 15 pips out of that. And this could maybe try to this zone. So you could maybe get a nice little run, maybe double your profit margin, but you'd also have a very tight stop. If it comes back wherever it comes in, your 15 pip stop is way down below. You have another zone, keeps you out of harm's way. Here's a trend line. Here's a zone. If I were to come in, pulls back. If I get into the trade, say right here, I can keep my stop well below this blue zone, and my target could be right up here. So I could be looking at a 15 pip risk, 15 pip target. I usually go for 7, and that would be the move. But until it breaks out and closes above and then pulls back, I'm not going to take the trade.
Right on. So Al, let's. Do you have Bitcoin on your?
I do.
On your platform, can we go check that out for
that's probably enough for that exercise anyway. So hopefully everybody understands what we're trying to do. I tried explaining a couple different ways.
Yeah, but that's not this. What Al's doing right now, it's not something that's simple, and you may not get that the first time if you're brand new. This is years of putting things together and making things work. So it's okay if you don't understand everything that Al was doing.
Where's my Bitcoin here? Why is it not coming up? Why is it not come up?
Yeah.
There it goes. There, just
let's check it out, man.
So here's my Bitcoin. Here's Bitcoin.
You're on the M5.
And
someone said
bounce. Here's the arrow.
Someone said Bitcoin sell, but what time frame are we talking?
Let me get my moving averages up here. We'll analyze Bitcoin here. We can do that. Template.
Yeah, I'll have a look.
All my moving averages are in the correct direction. We're getting a little bit of a green pullback trying to cross over. So here's the move out of the zone. Now this is the zone I'd be looking at the, I'm trying to get to let me get to a 15-minute chart. I like starting with 15 minutes. I may go higher, may go lower. But right now, here's the high. Here's today's range.
So
Here's
she's looking.
yesterday's range. It made a low, made a higher high, higher low, lower high. So this point here is in the upper 25%. This point here is in the lower 25%. I'm going to draw my fib line from here to here and see where the lines fall. So this was the last move. Here's the last significant. Here was a low. Here's a higher low to a higher high. And now it's in between. So far it has not broken through this high, has not broken through this low. It's going sideways in between this red zone. This is where the arrow comes in, arrow ranges come in. It's basically going sideways in between here.
That's good stuff, Al. So
here's the pullback, pulled back to the 61%. So basically from this point to this point, it retraced 61% and then it started big, but it came back up to retest this and it couldn't make a new high. Made a higher, so here's your wedge from here to here. Here's the anchor. Here's your anchor. Here's your first hit. There's your second hit. So there's the first hit, anchor. Here's the third hit on this trend line. It looks like this thing may want to start coming back down. It's right up in the upper 25%.
So the alert in question was.
So here's the range right now. Here's our range. Here's our upper 25% range. Here's our lower 25% range. Here's the lower 25 right here. This is the point we're using. Now, if you wanted to use this 60% range where it pulled back to 60%, if you wanted to use that, there's nothing wrong with that. You could do that. It just tightens up these zones a little bit. Oh, come on. So I don't like TradingView. Or I don't like this because I can't grab these so well. I'll tell you what, let me get my TradingView chart up. That's easier to maneuver.
For sure. So while that's going on, I'm going to go through a couple of these questions real quick.
Okay.
So
all right, let me go for Bitcoin.
Yeah. So what's going on sometimes is, so some of these things are a little bit advanced. Sometimes they look kind of like a university degree, but you're going to get there. It's normal for you some things to seem potentially overwhelming because you're not accustomed to it. So it's completely normal. You didn't come out of mama's womb drawing wedges, trend lines, and Fibonacci. Just doesn't happen. It takes a volume of trades, a volume of setups. It takes patience and perseverance, and just no matter what goes on, just stick with it.
Here's my range. Okay, so everybody see my charts okay?
Yeah.
Okay, so this is yesterday's price movement of Bitcoin. Here's the low, here's the high, here's our 60% pullback right here. Came back up, went up, made a lower high. So here's a low, here's a high, higher low, lower high. Here's where we start our wedge. We start building our wedge from here. So from here to here to here, there's our top wedge. Mark that. Boom. Now we go from, here's a low, here's a high. Now, if you look and see, if you draw a line from this point to here, there's the first hit. Here's the second hit. You can see that on this, I often say that I will accept the first break of the first one. I'll accept that before that. Here, you see where it hit a point and then retraced and it bounced off. Hit this point, bounced off. So this validates this trend line. So right here's your trend line. Oh, and just take it all the way up to, let's take it all the way up to this area right there. So here's our anchor. Here's a hit. Here's a hit. Now it broke. So this is significant. Now this wedge was broken, and now it's trying to retest this one. Now we can start looking to the down moves. So from the upper 25%, which is what we were talking about earlier, Here's the upper 25%. Oops, gotta lock this. Here's our zone. Here's our upper 25% zone. We're going to call this our 25% zone. I'm going to clone that. I'm going to clone this. And you can see that the bottom 25 is the same distance all the way down here. And here's our playground. This is our zones we're looking at. Now, these yellow lines are the ones that are significant to us. Here it came out of the zone, came back up. So now I'm looking for this thing to start coming down, making close, pull back, close, pull back, close, all the way till it works all its way down here. And it could very well do that. We don't know what it's going to do. But we do know that it broke this trend line. It's coming back up to retest, bounced off of here. Now we're looking at from here to here, seeing if this was the first significant move. This is probably a 61. Actually, this is probably a 78% pullback off of here. So I'm going to draw this from here to here. I'm going to change colors on this so we have a little different picture on this, my lower time frame. And see it pulled this from here to here, pulled back to 78%, just like this one pulled back to 78%. So right now it's starting to trend down. It's pulling back. Now here's another little trend right up here. Once it can break through this area. Now, if you look and see, I'm on a 15-minute chart. Let me go to a lower time frame chart. I'll go to a 5-minute. So right now I'm looking at, so we know that this zone is holding, and now we're looking for pullbacks. Now the second time it's pulling back, I'm going to be looking to, let me just take this one, just delete that one here. And now we're looking for the pullback as it's coming out. Now the moving averages haven't switched yet on the 5-minute. If I go to a 1-minute chart, which is over here, and I expand that, you can see that the 5 crossed the 13. Now it's being tested. So right now, the 5 is just now crossing back over the 13. So I want to see this thing pull up. So from here, it already came back down. Now I'm drawing my second fib line. Now it's, oh, come on. From here, came down, closed. This was the first move down, came back, retraced it. Because now we're going to take it. I'm just going to keep this one anchored up there. Now here's my 23 and 50 zone right in here. So I'm going to draw that. There's my 50. See, let me anchor this. Let me lock that so it doesn't move on me. Here's my entry area right in here. So if it comes in here to this zone right in here, there's my 50% line. We don't know how high it's going to go, but I would be happy to anything from the 23. Here's the 23, 38, 50. So this zone, now this is my new supply zone. I'm going to make that, call that supply zone. Or retest. This is basically the retest area. So here's coming back. It's retesting this upper 25%. Right now, it's in that zone. I could take that trade, but I would probably be more apt to take the trade once the 5 crosses back over the yellow, closes, then I could take the trade. Depending on how deep this thing goes up, it may keep on going. But I'd be looking at maybe putting a buy stop or a sell stop, maybe like right about in this area. Make sure I'm in paper trading here. So here's a sell stop. And we're going to sell stop it at 49.74, we'll call it. Not maybe 40. I'll go 40. Let's just go 409. We'll adjust it here. 40900. And it's a sell stop. Boom, there it is. And I'm just going to adjust this here. No, we're just up a little bit. So right now, as it goes deeper into this yellow zone, our retest zone, as it goes deeper, then I will be adjusting the zone. So right now, it's the 50% still holding. You can see right now it closed. Now this is on a 1 minute chart. I prefer to do it on a 5 minute. So let's go back to a 5 minute here. A 1 minute close above, it doesn't really excite me too much. A 5 minute close I like a lot better. So this is a 5 minute candle, and the 5 minute candle wicked up to the 38, but couldn't close. Now the new 5 minute candle, now we have our lower red candle. I would be looking at this, maybe take this thing short. If the price comes down, you'll get me in at the sell price, and then my target would be down here. So this would be my target. So, but my target at 46.76, we'll call it. So I'm going to come over here and I'm going to adjust this.
Al, when you have a moment, can you just, I've had a couple people asking now about your 25% zones. They're wondering, what is the significance? Why do you use them? How do they play into the trade, and how you select what it is you do?
I just like, basically you find out that the 23.6, which is basically what we're talking about here, the 23.6 is just a significant number. It's a Fibonacci number. It's just signifying the upper part or the lower part of the previous move. Actually, probably got into this. No, we're not quite into it yet. We've got the spreads still to work with. It's just a number that just seems to work. It's been working for years, and so I just like that, as it just sort of signifies the extremes of the move is what it really does. So right now we'd be in this trade. I'd be looking at a target to down here. So I'm going to adjust this protection.
But quickly back on, can we finish with that question?
Well, yeah, hang on. Let me just get this thing set here so I get my target set in here. Hang on just a second here. 46.61. 40, take profit 46.61. Modify it. So here's my target right here at this point here. Okay, now what was the question again, Eva?
Okay, it just basically people, they're asking, why are you even looking at the two zones? Like, how important, what is the importance that you're placing on the two zones on either end of the fibbo? Like, they're asking why.
Just like the 25% of the move, it's just showing the upper 25 and lower 25% of the extremes of the previous move that we were looking at for the reference move.
And that is not a good place for you to be setting your entries and that type of thing. Is that right?
Well, it's signifying that it's reached the end of a major move and you're looking for the turnaround. That's basically what it boils down to.
I think that's what they needed to know.
Yeah,
and you're rounding it up, right? You're rounding 23.6 and 76.4 or 76.2.
Right. Yeah. The number I'm actually really using is the 23.6 and the 76.4. Those are the actual numbers. I'm just saying 25% just for ease of conversation.
Okay. That's 100%.
Get that then? It's basically, it's signifying the end of the move. It's at 25% on one end of the fibbo and 20% at the other.
And basically I'm using the 23.6 because the 23.6 is a Fibonacci number. The 76.4 is a Fibonacci number. And that's why I use those levels. I'm actually doing a 23.6 and 76.4, but rather than saying that every time, I'm just saying the upper 25% and the lower 25%.
Okay, I think that made sense to them now. I haven't.
Bingo.
Yeah, it's a Fibonacci number.
Yeah, it just, they didn't realize that it's signaling the end, the possibility of the end of the move. It's a good chance that it's going to finish and go the other way.
Yeah, because we're looking for pullbacks, right?
Yeah.
You want to be entering on the pullback. You don't want to be entering as it's going up into the move, because what can happen is you get caught in a move and you end up getting the top and you're buying, and then you get that retracement that can be 23.6 and more, and then you get stopped out.
Bingo, that's it.
So that's what we're trying to do, is you're trying to get the pullback. You want the entry on the pullback. You don't want to enter as it's going up. You see that move right here where Bitcoin is? You see all those big bullish candles all the way up to the left, those big fat ones?
All these right here.
Yeah. So what happens is people, they're like, oh yeah, it's moving. All right, so I'm going to enter. Boom, you enter, that big candle comes up, and then you take that retracement and that pullback, and then you never get to your top again. And that's what happens a vast majority of the time is people try to get those big moves, and it comes right against them. But by taking the pullback, you see, if you would have entered on that, if you have a Fibbo from the bottom of that move to the top of that move, that's probably 50 or 61.8 retracement of that move. Then you can take that buy if you want and go into there. That's kind of the scenario that we're trying to explain. You always want to enter on the pullback.
And so here you can see it's starting to develop a trend. This trend is starting to develop. What happens is people, they see the strong move up. Oh, I'm going to jump on. I want to jump on because I don't want. So they jump on right here. It comes up a little bit. Well, where's their stop? Their stop is probably, let's say they jump in right here. They come up. Oh, it's going to keep going higher, higher. Now it starts to pull back. Where's the stop? And your stop is maybe here. Guess what? Just took your stop out. You go, oh crap, they just stopped me out. And now it's going back up. You say, oh, I should have stayed or sort of had a little deeper stop. So now you put a longer stop in there. So what happens is, so now you move your stop down and it comes back up. Oh crap, it's taken off again. So I'm jumping back in. Guess what it does? It pulls back in. This is the area right here where people get themselves trapped. Here's your trap.
That was the vast majority of my losses.
Down. And here, and right in here, this is the area where from here to here, it's no, the sellers came in and took over. The sellers came in and took over to drive it down here. Buyers came up, drove it back up. The sellers took over. Now the sellers took over with this strong move down. This is the one I'm looking for right here. This is the one I really like right from this move. Let's see if I can undo this here, unlock this. So from this move, this is the one where I'm starting to really look for the pullbacks. Right here, strong move down. Now that didn't break this, so it's still kind of iffy because we still have this upper trend here. From here to here, you still have this upper trend. Here's the origin of the strong move up. Here is where it pulled back and retested it. Right here, came back up, and now it broke. Now this is a significant break right here. So now you have, it broke this trend line, it came back up, retested the upper trend line, which was here. Here's our trend line, came back up and retested it. It broke, came back up, retested, broke again, and now it's on the way down. And you can see like right now, so here I got off this pullback is where I got in. Here's the zone I'm saying, here's the 25% zone I was looking at. And it came back up, got into my zone, pulled back my 23 to 50%, didn't break the 60. I can put my stop up here now, all the way up above here. I can use my stop. Where's my stop line here? Let me just do this. My stop can be up here. It pulled back to the 50. I usually take the middle of the next zone right here. Here's my stop. Stop zone right there. Here's my stop. And now it's just trending on down. And here, it's just about, it came back down, just about hit my target. Well, I'm on a 1 minute chart. I have 5 minute Fibonacci or 5 minute moving average right here. Here's another trend line. Here's a hot low, a higher low, higher low. Here's another trend line. And this may respect this trend line. We don't know what it's going to do, but again, you're looking to see where is it likely to bounce? Well, things like trend lines. Here's the anchor, here's the hit, here's the third hit before the start down, came back down. And look at this, it wicked right down, and here's my target. I probably could move my target up a little bit higher. But right now, all of my moving averages are moving in the right direction, and it's making new lows. And right now, I'd be up $141 off of just a 1 point move, a 0.1 move. And it's about ready to hit the target, and I'd be out of the trade. And I say, thank you very much. See if it closes out. It came back to us. I'm just going to close it out. Boom, done.
Fantastic. So that's how fast she goes. That's how you can do some pretty big damage to the charts with Bitcoin.
Why is it not closing out? Why did it not close out?
You have to hit the take profit one. You have to close the take profit one.
Close. Well, I'm closing this out here. Here's my entry. Why did it not close? I shouldn't have to close this one.
Well, hit it.
Well, it's not good. It's not going to do it.
Not closing it
I don't
either.
think so. No, no. So this is
Open
starting
up your
problem here.
paper trading.
Oh, yeah, but still should take it out. Close position. Close position. I'll do partial. Just see if that does anything. Well, it's not letting me out of my trade. But anyway, this is my target. Let's see if maybe it'll break down. Maybe we'll take it anyway. But you can see how this works. This is a good example of how we got in, where we took it, waited for the pullback. Again, look at the price action. Made a new high, came out, expected to come back in again and retest this high. This is a significant part of the whole equation right here. Here's my supply. There finally I took it. Here's my supply zone. Was it the spread that did it?
Maybe.
I don't know. Here's my supply zone. Came up, came out of the 23, came back up, retested it. All right, so now it came back out the second time. Now we can start looking at our Fibonacci's from here to here, pull back to again, I'm looking at the 50, the 23 to 50, which is right. The 23 is right here. 23 to 50, maybe go up to 61. Pulled, came back out. I do actually like this one a little bit better. I like the stronger move down, strong pullback, made a new low. There was the high. Now it came back into the 23 to 50 area. Here's my 50. Here's a 61. Here's a 23. Came back into that zone. And it came up into the wedge, broke the wedge. I'm in the trade, and it's going on down. It's still not doing it. Why is this not letting me close out? I'm glad it's paper trade. But anyway, that's the mechanics of how this all works. Hopefully that was a good demonstration on but remember, it goes up, forms a 25, it's in the 25%, comes back out, goes back up again, makes a lower high. Now you're starting looking for a trend. Strong move down, pull back. Strong move down. Now I can move this thing over to here.
It looks like it's entering positions on a buy. You
that
see
what it
those
is?
arrows up? You got
Yeah,
1,
it
2,
is.
3, 4, 5.
It should still close them out though. I don't get that. There, that
Anyway,
might put them out.
we'll figure it out later.
So wait, here's the strong. Strong move down, pull back. Had a little bit of a wedge here, broke that. So right now this thing, this little channel was broken. Strong move down, looking for the pullback. With pullback, I'm looking for the 23 to 50. Move this thing down to the 23 to the 50. If it goes up to 61, that's okay too. Here's our pullback. See how deep it goes. All my moving averages are correct. I'm on a 1 minute chart. All my moving averages are in the right direction. It pulls back. The green should not cross the yellow. If it crosses the yellow, it may go deeper. If it just comes up here, forms a little wick, I'll be in that trade. So right now, but see, here's a target area. This is a target Fibonacci line. This is a 62. This is a 30 minutes. This is like it was on a 30-minute chart with a 62 exponential right here. This would be a target place. Again, you can't make this stuff up. Strong move down. Notice I could probably move, since this is the origin of the down move, I'll move my Fibonacci over here. That'll tighten this zone up a little bit, bring it down to, here's my 50, came up into the 23. Still have a green arrow, basically. I could probably do, once it gets up into, I don't want to take unless it's into the 23. Okay, so now I'm good. So now I could do it like a little, here would be my target. On a pullback, I can do a little, maybe another sell stop. right at the 40. Let's go if it breaks through the bottom here. We don't know how far it's going to pull back. Let's go with a sell stop at 45.89, 45.89. Set the trade. If it comes back down, it gets me into the trade. My target's going to be down here. My target's going to be at 44.19. Protection, modify it. Take profit. 44.22. 40.0422. What happened here?
But we need to be extra careful also. If you're going to be playing around with the Bitcoin there, guys, understand this move, that will eat your pants if you're not careful. So that is a big move. It's really fast. We're working on a 1 minute, right? So that's why you want to be extra cautious when you're playing around with Bitcoin. Don't go live without taking a couple demo trades, a couple dozen demo trades.
But here would be my target. I'm gonna look over here to the left, see where the last rejection was. This is where the buyers came back in to drive it back up. I'll put my target right here, modify it, and see if it comes down. And I have another target down here. This is just a nice little scalp right here. We're looking at 577.24, looking at a 70, about $87 move to the downside. Everything's still in the right direction. Came back up into my zone. It wicked down, so the buyers started coming in right in here. So this could be a problem off at this point in time. But if I'm looking to see where my zones are, here's my 23% of the major zone, which we drew these different colors. This would be my ultimate target down here. But it has to get through this first. So right now I'm just trying to catch these moves as it pulls back, get in, take my profit, pulls back, get in, take my profit. Once it gets down here, it could possibly go all the way down to this one and do the same thing all the way down to here. Once it gets down to this level, I'm going to be looking for my lower 25% zone and start reversing the process. But right now, this level, and this level are like magnets to the down from the up move. It went up, created these levels to the upside. This is going to be like a magnet. It's going to come back down and probably try and retest this one. Maybe go a little bit deeper to retest that one. Once it gets past the 61, I would be waiting until it comes back out of the bounce. Nice little move down. I can probably take. I can even take it down. It pulled back to the 38, so I can move this. Actually, this is my target 1. This is my target 2. Anything below that, it's got to get through this. I expect it may bounce off of this. I'm not going to press it too much. I'm going to move this thing on up to 41.18. Protection 44.22, 40.22. Modify, boom, there it is. And we'll see if it gets our target there. I am projecting that it's going to come. Unlock that. It would not surprise me. I would expect to bounce over that, probably reject, maybe get me in again. You have to look at the spread. It's got to get through the spread. So this red line's got to get all the way through where my target is, or else it's not going to do it. Questions?
You seem to be all right, up to date with the.
Boom, there, just hit my target. Now, see, we hit the 38%, it's still going down.
So we're probably going down to to the 40,000 mark, it's probably going to touch that.
So here's the next strong move down. So now I'm going to reverse it. I'm already out of the trade. Now I'm looking for another trade entry. So I can come over here, move this to the top, move this to the bottom. Wherever the bottom is, we don't know where it's going to stop. But once it stops, once it retraces back up to, unlock this, move this over.
I wonder what Arrow's saying on Bitcoin there for the next zone on maybe the 5-minute or 15-minute.
We can take a look at it. Let me finish this little exercise here, and then we will. So here's right now, we don't know where here's a retracement. Here's my 23 to 50. Respecting that. Green. I like to see this green kind of curl on up to try and retest the yellow, but it may or may not. But right now, here's the fact I've got this big wick here. I like to see, I may go up to the, this is subjective. I usually like the 23 to 50, but sometimes I'll go up to the 61. It's a little bit stronger pullback. See if the 61 holds. If the 61 holds, see where this thing will close. I mean, this is a nice strong bounce. I would expect this thing to start curling up. As long as it doesn't, the green doesn't cross the yellow, I can still catch it on another sell stop on the downside. This is still the ultimate target. This thing could keep on going down. This is a little bit stronger pullback. It's coming back to retest this zone. And you move it up to here, possibly. 23. Broke the 50. Now see if it can close above the 61. Right now, we'd still be looking for a sell stop somewhere down here or here. Right now, I wouldn't want to get in until it starts hooking over. And then I maybe want to enter short in somewhere here, depending on how deep it pulls back. Right now, it's pulling back, retesting the upper 25% of this move. Here's the upper 25% zone right in this area. Upper 25.
All right.
Okay, all right, enough of this one. Let's see where we are with the, what did you want to see there, Matt?
Yeah, if you can throw, those zones. That's all I wanted to see, my friend. So that's potentially where it could come down. That green zone there.
Yep, it did form a green zone. Now it's going sideways in between here.
Mm-hmm.
I'm on a 15-minute chart, I think.
Yeah, you are. That's a lot of pips.
Yeah. Then go to a lower time frame, see where it is.
Yeah.
Again, here's
right
my
there.
upper zone.
Look at that. You're going right to the zone.
Now, at this point, I'd probably, especially if I'm with the arrow, I'd probably want to see a breakthrough there before it comes down. But there's a 38, here's the 50. These are my three zones right here from the up move, the larger up move.
Yeah.
That's from all the way over here. Here's my zero line. Where's my zero line here? Here's my bottom zone. Here's my top zone. Here's the 0. Here's the 100 down. Scoot this in here a little tight. So here's my 0. Here's my 100. My top 25% or 23.6. The bottom 76.4. Fib numbers. But you see it's got zones all the way here where it bounced. And you see where, look at this number here. It bounced in that area. Look at this number. It couldn't close above. It finally closed above, tested it. That's why these numbers are so important. You're finding out where the area from the up move, you find out where it is looking to retrace. It's as simple as that. And we're past our 9 o'clock. I think it's time to call it a weekend. Any other last minute questions or comments? So this is basically our strategy that we teach here. we're looking at the fib lines. We're looking at the arrows. I like using the arrow charts to bring our eyes to the charts. With Bitcoin, we don't have much for a heat map, so to speak, other than the fact see what the strength of US dollar is. And we'll do that with, say, where's the US dollar on the heat map? The US dollar is still weak. The dollar is weak, and weak to, it's kind of the bottom, it's the upper part of the bottom three. So I don't know, don't know of a correlation right now with the Bitcoin and the dollar, or the fact it trades against the dollar. If the dollar is weak, Bitcoin should be strong. If the dollar is strong, Bitcoin should be weak.
Perfect.
But here's the retracement. Came back up. It's pulling back up into from this. Where's my fib line here? This was the up. Here's the upper part of the move. You can see from this move down, drop, base, drop, retesting. But it's basically retesting. Very much retesting this little wedge right here. So we'll see. But when right now you have the cross of the green and the yellow, so you don't want to be taking it short as long as that's in that direction. We're going to wait for it to find out where its happy place is. Where did it pull back? This wicked up, couldn't close above the 61. You can see that it closed right below it. So right now this thing could start retracing from here to here.
Yeah.
Here's my 61. This is my zone. So I'd be looking at maybe doing a sell stop, maybe at the 38% line since it went up to 61. I usually like getting this area as my stop. Once it breaks through, if I get into the trade and it closes, I like to put my stop above here.
Yeah, there's still a green zone down there though.
Yeah.
So that's bouncing off that green zone.
So anyway, that's it for today. Thanks for coming in. Hopefully this clarifies some questions about how we do this. And have a safe weekend, and we will see you on Monday. Take care, everybody.
Absolutely.
Great weekend, everybody. Thanks, Matt. Thanks, Al.
Yeah, thanks, Matt. Thanks, Eva. And we'll see everybody later.
See you later.
Later, guys.
Stop recording.